3 lakh. Next, what they have done is they have deposited the cash in the bank. So, what are the two accounts involved in this? Bank account and cash account. So, the bank is the receiver. The business company gives the cash to bank. So, bank account data 2 lakh to cash account data 2 lakh. So, being the cash deposited in the bank. Next, what they have done is they purchased some goods for cash. So, two types of accounts involved in this question. One is purchase account and another one is cash account. So, the transaction is purchase account data 10,000 to cash account data 10,000. So, the meaning is goods for purchased for cash. Next, they have done the sales for cash. So, two types of account involved in this transaction. One is cash and another is sales. So, what is the transaction? Cash account data to sales account rupees 5,000. The next thing is the company have made some purchase and they made the payment through net banking. So, two types of accounts are involved in this purchase and bank account. So, purchase account data to bank account rupees 15,000. They have made the payment through net banking. Next one, they have made the sales, the company made the sales, that sales also, through the sales the payment is made through net banking. Okay, so we can mean it is a bank account. So two types of accounts involved in the bank account and sales account. So bank account data 30,000 to sales account data 30,000. So this is the journal entry. Next step we have to prepare ledger account. So what are the types of ledger we have to prepare? First we have to begin from the journal entry. So what is the first one? Cash account. We have to prepare the cash account for ledger. The next, Tamil Advance capital account for ledger. Next again, bank account. Already we have prepared for cash. The next one is purchase. The next one is sales. So bank we have given already. So these are the types of transactions we have to prepare for ledger. Now come to the ledger side. First we have to prepare cash account. So for this cash account we have to look at in the journal. Where are the cash transactions turned off? So close the cash account. What is the opposite side? What is the concept of the opposite side? Tamil Advance capital account. If it is in the credit side, in the ledger you have to post it in the debit side. Okay, so listen here. To Tamil Advance capital account is kept in the debit side. Then next look at the cash. Here there is cash. Close the cash account. Look at the opposite side. What is the concept? The bank account. The bank account is in debit side. So in the ledger we have to post them in the credit side. Next here you close the cash account. What is in the opposite side? Purchase. It is in the debit side. So you have to post it in the credit side. Next cash is in the debit side. You close it off. In the opposite side there is a sales. It is in credit side. If it is in credit side you have to post it in the debit side. Okay. So then there is no more cash. So again you come to the journal entry. So you total the amount 3 lakh plus 5,000. What will be the amount? 3 lakh 5,000. This side by bank account 2 lakh, by purchase 10,000. What is the total amount? 2 lakh 10,000. So 3 lakh 5,000 minus 2 lakh 10,000. What will be the amount? What will be the amount? 95,000. The credit side total, the debit side total is higher than the credit side total. Can you understand? Debit side total is higher than the credit side total. So you left this 3 lakh 5,000 with 2 lakh 10,000. What will be the amount? 95,000. This 95,000 is named as buy balance carried out at the end of the month. Okay. This buy balance carried out will be transferred to the next month starting February 1 and it is named as a June balance brought down rupees 95,000. Okay. The next thing is Tamil Advance capital. Again you come to the journal entry. You look it up Tamil Advance capital. Now you close the Tamil Advance capital. What is the opposite term? What is the opposite term? Cash account. This cash account is situated in the debit side. So automatically you have to post this cash account in the credit side, in the ledger credit side. So by cash account 3 lakh. This 3 lakh is a term at the end of the month is named as to balance carried out, and it transferred to the next month. As a starting February 1st, it is named as a by balance brought down 3 lakh. Next, bank account. So again you come to the journal entry where the bank account is situated. So the second one is bank account. You close the bank account. What is the opposite side? Cash account is in the credit side. This cash account is should be posted in the debit side in ledger. Again, where is the bank? You can see. So here bank account. You close the bank account here. In opposite side, it is a purchase account. So purchase account is in the debit side. So you have to post the purchase account in the credit side in ledger. Again, bank account, it is in the debit side. You close it up. In the opposite side, sales is there. Sales in credit side. So in the ledger, you have to post in the debit side. So if you calculate this, 2,30,000 will be is the total for debit side, and for credit side one is 15,000. So now the debit side total is higher than the credit side total. So debit side total is 2,30,000. You have to less the amount with 15,000. So the amount will be 2,15,000. This 2,15,000 is named as by balance carried out at the end of the month. This amount will be transferred to the next month starting as an opening, and it is named as a to balance brought down. The next one is purchase. So again you have to look over the purchase. So come to the purchase here. Where are the purchase? Here there is a purchase, closing of purchase. What is in the credit side? Cash account. It is in credit side. So in the ledger you have to post them in the debit side. And next thing is purchase account is here. Close the purchase account. In the opposite side, bank account is there. It is in the credit side. In the ledger you have to post them in the debit side. Again your bank, you close it off. In the opposite side, sales is there. Sales in credit side. In the ledger you have to post them in the debit side. Okay. Again you come to the purchase account. So the total is 10,000 plus 15,000. What we have? 25,000. So there is no transactions in the credit side. So what you have to do? 25,000. It is named as a by balance carried out 25,000. It is end of the month. It can be transferred to the next month starting February 1, and it is named as to balance brought out 25,000. The next thing is sales. So again you come to the journal entry. Where are the sales? You have to look over the sales, close the sales. In the debit side, cash is there, so it should be posted in the credit side. Again, here one sales is there, close it up. In the opposite side, the debit side bank is there. This bank will be transferred or posted in the ledger at the credit side. So again, you come to the total. So the total will be 35,000. No more transactions in debit side. So your total 35,000 will be there. At the end of the month, this 35,000 is named as to balance carried on. At the next month, it is transferred and it is named as by balance carried out.